The US dollar, vulnerable again. Let's quickly break down the latest fundamentals. Morning, 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 baby. Happy Thursday. I hope we're all well and truly lit. Yes, we are back with another day in the markets on the back of a highly volatile day yesterday, right? Which we'll get into. Now, before we get into and cover those moves and the news there, I just want to speak about the dollar. Okay. Now, I want to put something in perspective by looking at the monthly time frame here for the dollar index and explain a couple of things. Now, obviously, look, we remain in an extremely tight range. Everything right now is directionless. We have not got any clear trends for the dollar related and a lot of other majors. Okay, I went over this before, but I just have to make it so clear because nobody can, if you're a swing trader, right, naturally a swing trader, do not beat yourself up and the fact that you're not getting those beautiful swings as you usually would be because the market's not trending. You can't expect those nice clear-cut moves when the market is indecisive. That's what we are right now. We are indecisive. And look, when you look at the dollar here from late 2022 up till now, we've done absolutely nothing. Okay. The dollar has gone nowhere. Right. And the reason for this is because we're waiting for divergence. Remember, every major central bank, more or less, over this period has been in the same boat. Okay. We're in the same boat. Everybody, had raised rates and kept rates higher for longer in order to deal with inflation. They wanted to bring down inflationary levels. Excuse me for a moment, guys. So that's what's kept us in this awful range, and we're waiting for that edge. Now, remember, all here from mid-2021 right up until September, I was calling this upside, okay, during this period. And we did capitalize on it. I was calling this upside back here. And this was because the FOMC was one of the first major central banks to communicate to the markets that they are going to start raising rates, and enter this new cycle of rate hiking. Other major central banks weren't talking about it. They were behind the FOMC, long behind. And then the FOMC actually started acting, and it gave this dollar this growing edge versus other peers. They started hiking rates faster pace than other major central banks. Other major central banks eventually played catch up, but this why the dollar had an edge because of that monetary divergence. Baby, just to quickly interrupt this video with another PAM update, because I know people are messaging me right now on this. We're getting closer towards launching this to everybody. As I say, this has been just for the immediate TFTC members, but we're almost ready. I was hoping that it was going to be ready this week, but kind of looks unlikely at the moment, just waiting for things to finalize on Blueberry's end, but it should be almost ready. Okay, now, look, I just wanted to quickly jump on because I've implemented something that's been in the works for a while. It's always, things take time, right? Great things take time. Yesterday, after a lot of back testing, implemented a strategy and system to essentially capitalize on the volatility with high impact releases. Now, with that, obviously, as I say, it's been largely back tested, but we're forward testing it now on the live account, really reduced risk. But we actually gained 3% yesterday. Of this 3.79%, 3% was gained yesterday on the back of that CPI data, where obviously that wave volatility came into play, which was nice. And believe me, obviously high impact data is extremely volatile trade, but the risk management is very much stringent with this. So I just wanted to diversify outside of the market neutral strategy that we've got running right now. And look at it. We're up 56.47%. Drawdown remains relatively low, on this medium risk account. And as I say, is profitability 75%, which is good, strong profit factor, and running nicely. I will continue to update you on this when we do decide to obviously go live. Well, not decide, when we're ready to go live, I'll announce that in the Discord. But looking very, very promising. Obviously, at the end of the day, this is still short term at the moment. When I say short term in terms of the history, but I'm confident with continued optimization, continued monitoring of market conditions, this will have longevity. Okay, this will certainly have longevity. Obviously, with anything, obviously risk, your capital is at risk, as with any strategy, any system, anything in the market. But things remain stringent on our side to protect, obviously, risk as best as possible. Anyway, back to the video. Okay, that monetary divergence. And we just right now, fast forward, at the moment, we just don't have that divergence yet. Okay, but it will come. Okay, this is why I say near term, the dollar remains vulnerable. But over the longer term, okay, over the longer term, the dollar can have that edge again, like we saw back here, as I explained. Why? Why, Ken? The dollar can have that edge because you got to remember the FOMC are still yet to cut rates. They're still yet to indicate when those rate cuts are coming. The timing is not clear right now. Okay, on the back of yesterday's decision, where, you know, ahead of that decision, we saw CPI data in the United States cooling. Okay, inflation data cooling there. Now, despite that, obviously, the FOMC still remain hawkish, as we saw in that latest decision. And the reason for them remaining hawkish is because the economic activity, they say, continue to expand at a solid pace. Jobs gains have been strong. Unemployment rate still remains low. Remember, wages as well that we saw were elevated. So that's all very much inflationary right now. They say inflation has eased over the past year, but remains elevated. They say modest progress, only modest progress towards their 2% inflation objective. Remember, they want to bring down inflation towards 2%. That's modest right now, they say. Do you understand? So it's still a hawkish tone there for the dollar. So on my point, despite the markets right now running with their own narrative, okay, they're running with their own narrative. They're focused just narrow-mindedly just on right now, you know, still the optimism of those rate cuts. You know, we're still going to get those rate cuts. That's what they're focused on right now. They're not thinking about the bigger picture where we cannot deny underlying macros are going to be dominant, like we saw here. They will be dominant. And when they do, bear in mind, not if, but when, that dollar will regain the upside momentum. But for now, we remain vulnerable. Just focus on this process of disinflation, these signs of, you know, disinflation. You know, it's what I mean. We have to remain nimble and agile and move with the narrative that the markets want to run with. As long as we understand why, right, then we're cool. You know, we're cool. But that's why the dollar is on the back foot. Well, remains vulnerable despite that, you know, hawkish FOMC decision yesterday.